Meanwhile, technology stocks have had really a great run so far this year, but is the rally running out of steam as money is really being allocated to other areas now? Joining me is Daniel Niles. He's CEO of Neuberger Berman Technology Management. Dan Niles, always great to see you. Thanks so much for joining us.
Thanks for having me on, Maria.
So, Dan, do you think we've seen a bottom in technology? Would you be committing new money to this group?
Actually, yes. I think we've seen a short-term bottom. I don't want to confuse people. I think over the long term, we haven't seen the floor. But I think this move is actually going to be pretty powerful, and I think it's going to last for several more months. So I'm actually pretty upbeat. And the analogy I would draw is, you know, everybody's comparing this to the 30s. If you go back to the 30s, 1929, after the crash that you had when the market went down 48%, you had a 48% rally over 6 months. And you know, it was very strong. People thought we had seen the bottom. The bad news was then the market went down 85% from that level till 1932. And so, you know, what I kind of see is a repeat to some degree, not the 85% drop, but I see a really good move here based on a lot of factors.
So, Dan, you've got a gain in the NASDAQ of 22% just since March 9th. Where specifically in technology would you be looking for the growth in the next couple of months, 6 months, say?
Sure, great question. I think my favorite sector within technology is semiconductors, and I think I said that you know, when you had me on the program last. And it's really a relative game. If you look at the semiconductor sector, I'm honestly having a hard time finding any company that's going to miss their March quarter forecast or have to have numbers lowered for June. Now, the reason's actually pretty simple. A lot of these companies forecasted revenues down 50% year over year in the March quarter. Now, global GDP is down maybe 6%. A lot of their customers are down maybe 20% year over year. So the fact that they're forecasting down 50, and maybe that ends up being down closer to 40% year over year, you know, it is better. The numbers will get improved. And if you look at valuations for a lot of those names, you've got stocks trading at 1x book value. And they're making money. So for me, that's the space where I'm looking to put fresh capital to work because I don't see any issues with the numbers. And ultimately, that's what drives stock prices is earnings and valuation.
So, Dan, but where are the earnings coming from specifically? I mean, you look around the world, we talk about this economic slowdown, you know, on the consumer side of the ledger. People are pulling in their horns in terms of spending. Same with the business side of the ledger. So what's really driving the growth in semiconductor companies right now?
Sure. There are a couple of things, actually. The first one is really that because we went through a horrific meltdown in 2001 and 2002, and a lot of the tech companies at that time, as you may remember, they didn't believe it. They didn't think it was going to be that bad. So they never reacted quickly to it. This time around, a lot of technology companies came out and slashed inventories very aggressively. And so they got that under control quite quickly, which is why you see many semiconductor firms with revenues down 50% year over year. Now, their customers are coming back now looking at business and going, you know, it's bad, but it's maybe not quite as bad as I thought. And so what they're having to do is scramble around a little bit and look for parts. You may have seen yesterday Best Buy actually on their conference call talked about the fact that they could have sold more if they'd had the inventory, but they didn't. They overcorrected. And so the first thing is you're seeing a little bit of inventory improvement, and that's helping out quite a bit. The second thing is if you look at cost of living adjustments, we had the biggest increase in cost of living adjustments since the early 1980s. So anybody on a fixed income, they saw that improve by 6% at the beginning of the year. Also tax refunds, they're running up over 10% year over year starting in January. And so that's putting a few more dollars into people's pockets. And then some of the stimulus packages that we're seeing going through, especially in areas like China, they are actually having some impact on demand for low-end PCs and handsets. So it's nothing, I mean, this, as I said before, I don't think we've seen the bottom yet. But on a short-term basis, much like, you know, in late 29 to early 1930s, I think you're seeing some of these things having an impact. It's making things look better.
So you're looking at a short-term bottom then, but over the longer term, you think that there's more to fall. What do you think? We're going to see another drop, perhaps later in the year, or what? What about on the long term, Dan?
Yeah, long term I'm incredibly bearish, and what I would say is the last several months has actually made me more bearish on the long term, and let me tell you why. I mean, if you look at the fact that we're running a $2 trillion deficit right now, the way we got into this problem was consumers had too much debt because interest rates were too low and they borrowed more than they should have. The way we're trying to get out of this mess is by lowering interest rates even more and encouraging even more borrowing, and this time by the federal government. Now, that's going to have to get paid back at some point, just like consumers had to pay back their debt. So if you're running a $2 trillion deficit, there's only a couple of ways to solve that. You got to raise taxes, or you're going to have the dollar devalue tremendously. And you know, they're talking about running a couple of years of deficits that are this high. The second thing is housing prices. They're still dropping. That's going to put pressure on the banks. Consumers are still increasing their savings rate. That's going to be somewhat of an issue. So all of these things on a longer-term basis, I think are going to come back and haunt us on the back end of this.
All right, we'll leave it there. Dan, always nice to have you on the program. Thank you.
Thanks, Maria.